My friends, welcome back to the channel. Let's do this. This is going to be AMC's weekly Outlook video. I usually do these videos on Sundays of every single week to give you my thoughts on what I see going on with AMC, GameStop, and just kind of the overall broad market. But the main focus is going to be on AMC. Before we jump into the video, a couple of things. You guys know the deal. Nothing I'm giving you is financial advice. Everything I'm giving you is for entertainment and educational purposes only. Just telling you what I see on the chart. Your job is to do what you want to with that information. I always want you to make the best decision that you can for yourself, your family, and your portfolio. If you haven't done so already, please follow me on Twitter, Colin_Gladman. Easiest way to get updates as far as what I'm seeing, important news, things of that nature. And like I said, please just follow me on there if you want to ask questions, things of that nature. Real quick before we also jump into the video, if this video does help you at all, please like and subscribe, comment, all that kind of stuff. Help the channel grow. All right, let's get into it. So we got a lot going on this week as far as what could be potentially going on in the overall broad market with lots of important earnings this week. We've got the GDP report. We've got the FOMC meetings talking about what kind of interest rate hikes to anticipate, things of that nature. If you need a calendar or anything like that, shout out to my buddy Josh, Lucid Trades. He posted right here basically a report of all the earnings and then everything as far as Fed meetings go and things of that nature. You can go take a look at that. But it's an interesting week coming up. I mean, there's a lot of things that could really dictate what happens with the market. So let's jump into some charts. Let's take a look at that because we're going to have to talk about some bull case and some bear case scenarios. So the first thing I want to do is let's actually start with GameStop. So I tweeted this out right here that the last time that all of GameStop's EMAs really coiled up like this, and you had the 50 crossing over the 100, you had the 20 crossing over the 200. I mean, it really turned out into obviously some nice moves. Even if you factor or take out, what happened on January 27th, I mean, just the moves in general were really nice if you were in right here. So what happened leading up to the split and everything that happened this past week is, as you can see, all these EMAs, and once again, this is on the daily chart, but all these EMAs were really coiled up. The 20 has crossed over the 200 and the 50 has crossed over the 100. Okay. Now, this does not mean the exact same result in any way, shape, or form is coming, but if you look at what happened last time, this move right here, it also had, before it started to bounce back, it also had a 30% retracement. Okay, so you don't have to necessarily just because this one move happened, there's no more red days. I mean, look how many red days are in here. Okay, so all I was pointing out is the setup that is going along with it. And when you have these EMAs crossing over each other, then that is going to be a good thing, okay? And those of you that have followed me for a while know that I always talk about how stocks, so we're already at a 14% retracement from the top of when that actually happened. So those of you that have followed me for long enough know that I always talk about kind of how stocks are like lungs. They need to breathe in, they need to breathe out. So when you're breathing out, that's going to be when you're getting the push-ups, and they need to breathe back in. That way they gain the energy to continue to push back up. And regardless of what your feelings are as far as, well, everybody only buys and holds. Well, that's just not true. Not everybody does that. There's always buyers and there's always sellers on every single stock. Plus, you've got the option chain going on. People are going to take profits on their options. Most people don't buy options with the look at exercising them. Most people buy options to have the leverage of 100 shares, so that way they can have the leverage of 100 shares without actually owning 100 shares. So those people are always going to be taking profits as well. I know I do. So for GameStop, really what we want to see is kind of from a local fib right here we would love to see. So look at that. The 236 provided some support. So even if we came all the way down here to the 382, around that $32 range before we started getting a pushback up, then I would be okay with that. Let's look at everybody's most favorite controversial indicator lately, at least on my Twitter feed, the RSI. Which, let me go ahead and address this. When I ever talk about the RSI, being overbought or being oversold, it is never to say that, like, oh, well, it can't get any more oversold than this, or oh, it can't get any more overbought than this. The RSI can always get more overbought. The RSI can always get more oversold. But when you do get to super oversold territories, that's when you're going to see relief bounces. Just like when you get to super overbought territories, that is with the areas where you're going to see the pullbacks happen. So for instance, right here on the daily, for GameStop on, what would that have been? Probably that March run. Yep, March 29th area. So the daily RSI, finally topped out at 78. However, it went from 70 to 78. So there was 8 points of technically being in oversold territory before you get the pullback. I'm just saying, once you get to those areas, you need to be cognizant. So I use the RSI of letting me know, good entry points and good exit points. Okay. So, but I mean, the reality is most people that are trolling about it have no idea what they're talking about anyway. So, and by most, I mean all. So that's what I'm going to be looking for GameStop. A little bit of a healthy retracement here and starting to push up. We've got to get over its massive. So this back here, before the March run, back on March 14th, this was the first time that I drew this pennant. We've got 3 really important reactions back here before January when the buy button was taken away. And then right here, as you can see, for the most part, it has been respected the entire time. So getting up here, above that $38 range or anything along those lines. And guys, another big misconception is a break is not enough as far as I'm concerned. We want to see a break, a hold, and a close above the bear trend, then potentially a retest, and then continue to see volume want to push the stock back up. So it's not just as soon as it crosses, Colin's red line right here, we're in the clear and it's all-time high coming. That's not what I'm saying at all. Okay, so just want to be clear on that the trends are very important. We want to see those lines get broken, but it is not just as soon as that line is broken, it's over. Okay, there we see fake out breakouts, unfortunately, too much with meme stocks. Excuse me. So now let's jump over here into AMC. Let's start with a more micro look, and then we'll kind of back out and look at things from a more macro perspective, and then we'll jump into the cycle chart at the end. So right now what we got going on with AMC is obviously on Friday, just AMC absolutely got obliterated and then got pushed down super hard. And let's look at RSI. So this is where I was tweeting out about the RSI. I first called it out at like 1467 or so. Then it actually came down all the way as low as 13 something, I believe. Yeah, like 1330. So it continued to get oversold, but then you got the bounce. Also, too, if you follow me on Twitter, you know that I called the bounce at $15.28. And that's where we found support, and now we're trading in this horizontal channel right here. Now, for horizontal channels, these are going to be your 50-50 patterns. So typically we'll see, a little bit more bouncing around in here, and then we're either going to have a push up out of this, or we would have a push down out of this. And either way, guys, this is a very micro look. So whether we broke up out of this or whether we broke down out of this, it's not anything too crucial on a more macro perspective. That would be more of an intraday look. So, but we finally found support right here, which if this is why I was calling for that move or that support level, which is, so right here, no, it would have been the other one. But it was right at the top of this range right here. Plus, it was the 0.5 fib right here. So that's what I was looking for as far as the bounce goes. I entered some calls right here and exited them right here, mainly because the market looked so awful. Oops, it would help if I would. There we go. Actually get on the top right there. Yep, so right here. So this move right here, this fib, was what I was watching from the big push up. We had the bear flag, we had the bull flag, then we had the push up out of that. So 0.5, once it broke, clean on through that 382, then the next one, I was pretty sure because of RSI levels that we would catch support right there, and we did. So I really think to an extent the overall market is going to kind of dictate, our next moves from right here. However, when we look at this, our more macro fib, now we're looking at, potentially the 382 being at 1506. So if we saw a continued push down, I think, we would definitely see, hopefully, some good support at the 382. But if the overall market is just getting destroyed, with the GDP report, or if interest rates are going to get hiked way more, if earnings start rolling in bad, AMC is just not going to be, protected from stuff like that, even though we've still been way outperforming the overall market since, this low right here. We've gone through a season where between, what happened in November, the market has, been absolutely tumbling since November of this past year. We've been in a bear market, and you've got a lot of small and mid-cap companies, that are solid companies that have been beat up, anywhere between 50 to like 80% even. So I do think, my personal opinion is AMC right now is trading towards the bottom of its range. Now, it can retrace back lower, but I really think, anywhere between this about $9 to $12 range is going to be, its lows. I said that, back before the March run, that we would look back, years from now and go, man, wish I'd have snagged a little bit more back then. I still believe that, okay? So even if we broke down here out of this horizontal channel, that would take us down to the 382, right around that $15. Would definitely be looking for support there. These are natural, normal retracements. Not every single time AMC goes backwards, you need to be screaming crime and manipulation candles on Twitter. So sometimes it's just part of healthy movements. Historically, you look at any stock that has had splits before, and you typically see a pullback. Like I posted on Twitter, you typically see a pullback when that happens, but that helps. That's typically, usually, always helps it, going forward. So still very, bullish on GameStop and everything along those lines, heading into the future, just like I am on AMC. If I didn't have faith in these investments, I wouldn't have them. I wouldn't be wasting my time making videos right here. So, people ask me all the time, do you still believe in stuff like that? And yes, I still believe in all-time highs for GameStop and AMC. So what we're playing out right here looks to be very much, and not looks to be, in my opinion, it is, we've been accumulating ever since the March run. So we had the big, spike in March. People definitely took profits up in here. Now we're coming back here, and we've been in an accumulation. So when it comes to Wyckoff, there's two types of accumulation schematics. One is going to be one with a spring, and one is going to be one without a spring. So, if you just look at essentially this schematic, and not everything's going to follow one for one, but if you look at this schematic and now look at AMC's range right here. Okay, look at that. Look at that. Look at that. Look at that. Look at this. Now look at that. So, a lot of people have been saying, is this potentially, our sign of strength range? So right over here in phase D. And the answer is, it absolutely could be. We could be just coming into a backup, last point of support before, pushing back harder. So if that were the case, the type of move that we would want to see, this week is even if it came down a little bit lower, but, we would kind of want to see it, trading in this range right here. Typically what we want to see is once our lower low is made, then we want to see a little bit of a higher high, from that range and lower low. So kind of that, trading into a range, into like a pennant, things of that nature. So that would be the move that you would be looking for if you're looking for the SOS, which then would eventually lead to, the markup into the next range. Okay. So I can definitely get behind that. I can see why people are saying that and charting it out. It really just depends, what kind of a retracement we're going to be looking at. The more micro we get from a fib level, so like right here where I had the 0.5 fib, lining up, then coming down here to even, 1450, or even as far as 1350, to me is still going to be a nice, retracement to get the push up. At the end of the day, the main thing that I want to see is I just want to see, this support. Just let me go to the daily so we can look at that. But this support, from our all-time low, you can see is what we've been trading on. Okay, so as long as this support line holds right here, then overall to me, once again, the move is still going to be bullish from AMC. And just like GameStop, here's kind of the overall major pennant that I'm tracking for AMC. So that means we've really got to get over, that kind of $22 level for me to start getting really bullish on AMC, just like what I said with GameStop. So let me get rid of this real quick. So where does that really leave us going into this week? So going into this week, like I said, we want to see, even if it's a really awful red week, we want to see the overall, macro support holding. Bull case scenario is going to be if we start pushing up, which let's measure some of those targets real quick. So I'm going to use this from the same point that I used for the fib retracement. I'm going to use my fib extension here. And so getting back over, 1673 is the 236. A big one for me would be that 1763 area, that 1750 psychological area. Once we're starting to get over those, then I'm going to start to feel, more bullish at that point in time. From a range standpoint, now we're kind of back in this range right here. So you can also see why 1528 was really good support. It was support right here. It was really good support before we took off in March on that massive run. So that's why, once again, between the fibs, between support levels, that's why I was calling for that 1528 support. Now that doesn't mean it's going to hold, but it was definitely the reason, in my opinion, why it caught us. So we're back in this range right here. So we really want to see $15.28 level. I would like to see us, kind of trade around in here, start to push back up later on in the week. That would be the bull case scenario. Bear case scenario is going to be if we do tumble out of this range, then like I said, at the end of the day, we want to at least see right around, that $13 level catch us and start pushing us back up. So last but not least, let's look at the cycle chart. So if you've been following me since March of this year, this is the chart that I have been tracking. Here's the line that I drew in Sunday's last week video, and I mean, it would be hard to track more perfectly than that. If I'm being as honest as I can, I would have liked to seen a higher push-up this week. Now, that doesn't mean it can't happen this week and then we come up and touch it before we push back down, but I was really hoping for right around that $18 and 60 cent to 90 cent area. So last week's video, I called for A decent week would be 17 to 17.50 would be our high. A great week would be $19. And so if you average 17.50 and $19, it comes out to $18.25. And we saw $18.37. Yep, that was our high this week. So could this be the move right here? Where we touch towards the top of the bear flag, and now we've essentially got to come back down here into that $15, $16 range before we start curling up, and then we kind of get kind of a slow, steady movement up to here before a slight pullback. And then, like I said, once we get past 22, I'm going to be looking for a relatively quick move, all the way back up here to the $34 range. So this isn't going to happen in a week, this move right here. What I am thinking and what I would like to see is I would like to see some, pullback early in the week, or at least kind of trading in this range, relatively flat. Even coming down here, let me see here, what's going to be right in this range. So staying above that 1450, I think would be, a really good look for the future of what I'm seeing as far as what I'm tracking. So, overall market to me, guys, doesn't look great. I said on Twitter yesterday that Apple doesn't look great. They got their earnings this week, and there's a lot of shaky looking charts to me, in my opinion. So overall market doesn't look great, but we want to see AMC being able to hold up nice and strong. So for me, anything kind of here, looking at cycle chart versus looking at fibs. Let's look at the fib in this range again real quick. I don't remember the exact level. Yeah, so coming back here, touching the top of this range, 14 over 1450. I would definitely like to see. Yeah, there you go. Sorry, guys, I'm just kind of analyzing the chart here as I'm talking to you guys. So right in here, right around this 1468, it wasn't last week, it's 2 weeks ago. I was talking a lot about 1467. So if we come down here, I'd like to find support on that again before starting to trade a little sideways and pushing back up. Okay. I noticed and once again, this is very small intraday looks, but can give you an idea of what's going to happen on Monday. So the Bollinger Bands on the 5-minute chart are just getting insanely tight. So I do think we could see a decent sized move, come Monday, whether or not it's the push down. So if it was a here, start to push down either to here or even all the way to 1467 before we started working our way back up. That would be my more bearish case. And honestly, I'm anticipating that this week. I think the market could be a little crazy, but if they come out and they talk about how we're not in a recession and we're gonna stick with 75 basis points hike or anything like that, the market definitely could rally. So I do think it's gonna be, we got to kind of wait and see what the chart is setting up for before the news is going to be coming out. So that's everything that I'm going to be looking at this week. So we want to see some support. We've got a lot of support. The most bearish thing to me when it comes to AMC is the fact that, looking at the EMAs, I said going into Friday, what I would want to see was I would want to see the 100-day acting as support. Let me get rid of the Bollinger Band so you can see. So I was hoping that the 100-day would act as support at 1620. Obviously did not. So now we're looking at the 20-day around that 15 range, or the 50-day at that 1450 that I just talked about. So a lot of support underneath us. The move is not over. It is not time to pack it in or anything along those lines. But I would say short term, seeing a little bit of bear moves, while long term, like I said, is still setting up just fine. We've also got a gap down starting at 1696. So, a lot of reasons to be optimistic. Like I said, I would say I'm about 60-40 more bearish going into the week. I would say bear to start the week. Hopefully we can start to recover towards the end of the week. But that's everything I got for today. Once again, please like and subscribe if this video helped you. Follow me on Twitter. Trade your plan. If you hear nothing else today, here, trade your plan. All right? Have a good one, my friends.